All right, everybody. It is Friday, March 6th. Market down again, 500 points as of this video that I am making right now. So the job numbers were good. They were great. Actually, my numbers were well below where the government number was. So I look at things like weekly unemployment claims, initial claims for unemployment, 5 years of past history on the job gains, the payroll gains for the particular month. I look at year over year differences in unemployment benefits, being a whole bunch of things. Pardon my voice, I got a little laryngitis. So the data that I use is usually pretty accurate in predicting at least direction above or below the consensus. This time it was way off. My number was weak. This was a very, very strong number, which again kind of raises this uncertain picture. I mean, on the one hand, and I've been talking about this, we have no real strong evidence of any slowdown in the economy. Now, when you look at jobs, when you look at bank credit, loans and leases, that sort of thing, when you look at petroleum exports, imports, demand, gasoline demand, distillate demand, inventories, all these metrics, there hasn't been, and I see a lot of these things every single day, there hasn't been, any real indication of a slowdown in the economy. Now we hear all the anecdotal evidence. We hear companies warning about profits and lowering their guidance. We hear stories about airports being empty and planes half full and schools closing down. So, I mean, it might just be a case of the data has not caught up to the reality of what's going on the ground right now or in the air. Anyway, it's not funny. It's not funny. Maybe I have coronavirus. All right, listen. Come on, all kidding aside. So we'll see. We'll see in tonight's bank credit report, the H8. Treasury yield, 10-year yields at 0.7. I think they hit 0.6 something today. Incredible. The collapse in yields has gone parabolic. And what's interesting is that the Fed, I mean, they're still clueless about this. They're like, the market may be overreacting to conditions, but they're buying $80 billion a month in treasuries. They're literally sucking up all the treasury supply, leaving the banks and the institutions to have to, compete with themselves to get whatever supply is out there to meet regulatory requirements. And the Fed officials are like, gee, why are the rates going down? Well, number one, the rates must be going down because the market's panicking about the economic situation and, you're buying $80 billion a month. These are the people we got running the show here, folks. Okay, so some fiscal stimulus today. President Trump signed an $8.3 billion spending program to fight coronavirus. That's something. That goofball Larry Kudlow was on air talking about maybe plans for a targeted stimulus. The guy was like, he was almost shaking talking about fiscal stimulus. Because he hates that. To him, it's all about tax cuts, supply side, right? Which tax cuts would be fine with me too. A payroll tax cut would be awesome. Kudlow is like shaking to even, the thought of mentioning that. Well, maybe. And then he's telling everybody to go out and buy stocks, which might be, the right thing to do. I'm not saying no. But your job as chief economic advisor is not to promote the stock market necessarily. It's to promote the general economy, basic conditions. What are you going to do? And here's another thing, OPEC. Now this is big. I think this is big. Russia did not play ball with OPEC. They told everybody basically, go ahead, you're on your own, pump whatever you want to pump. And to me, it looks like Putin is sticking it to Trump. He wants to bankrupt the shale producers here in the United States. So oil was down 10% today. We saw commercial interest flip to net short about a week and a half ago when we rallied up to 54. And I said, I don't know if I said in a video, but I said in my report, this is very unusual because they were buyers from 57 all the way down to where we get down to like the 47, 48, 46. They were buyers. And then when we had that blip up to 54, they flipped short. And usually you never see them reverse their position until prices get back to at least the highest level where they initially got in. So they were very bearish, and correctly so. But now the floodgates are going to open, and I think you could see oil really come down. But again, we need to see real evidence of economic slowing, of economic contraction. Even a slowdown, never mind a contraction. We need to see some evidence. I need to see some evidence. Now, I was one of the first ones back in January when everybody was saying, oh, buy stocks, everything, buy stocks. Now remember, as long as you've been following me, this goes back to 2015, I'm making these videos. I said, you got to buy stocks. You got to buy stocks. In 2016, leading up to, we had all those things. We had Brexit. We had the Trump election, which that night the market dropped 800 points. I was saying, you got to buy, you got to buy. Right? We had the trade war stuff. We had the inverted yield curve. I said, you got to buy. It's not going to be a recession. But then in January, for me, what I saw was the slowdown in the fiscal flows. And I've been talking about that, right? I've been telling you about that. Tax flows going faster than the spending. It's negative. It's no good. Stocks were going up. Everybody, oh, it's got to buy. The worst thing you could do right now is take profits. We had big shots on Wall Street saying that. And I said, watch out. The Fed pumping in reserves, pumping in. That's no good. It's going to slow the rate of lending growth. And that's exactly what happened. And now we have this. And I've been telling you in the last few weeks how unemployment benefits, the trend is going up. We're up year over year. We haven't seen that in at least 10 years. So that's where we are. And if all these anecdotal pieces of evidence are correct, if everybody who's out there telling us, corporate executives, CEOs, people on the ground with their own businesses telling us things are slowing down, it's going to show up in the numbers. Which means there would still be a long way down for stocks. Anyway, my voice is shot. Go to my website, Pitbull Economics. A lot of people follow me. They made a lot of money on this stuff. A lot of money on this stuff. It's all MMT. Nobody else does this. PitbullEconomics.com, right on the front. And in this link down below, sign up for a 30-day free trial. Have a great weekend.